What is up, guys? Welcome back to another trading video. Today, I'll be teaching you a really good strategy that I've been using for the last few months. It's helped me build my small account tremendously. And you all know me, I love trading supply and demand. However, this strategy in between zones hits different. The best part about it is that you can use it to the upside and to the downside. And in all honesty, it's super simple. So if you all like this video, make sure to like, comment, and subscribe. You definitely want to stick around for this one because a lot of people have found success with this strategy. So the breakdown of this strategy is actually really simple. So first, we need to find and mark pre-market high and pre-market low levels. Second, we wait for a fair value gap to form on the 5-minute time frame. Third, we look for a retest of the pre-market levels. And four, we use the 9 EMA and 20 EMA. If all of these things align, that is perfect. That gives you more confirmation in the trade and ultimately is the best setup. But let's say the pre-market high and low retest doesn't confirm and everything else does. You can still take the trade, but it's going to be lower probability. And that's the same thing for every situation. Let's say pre-market confirms, fair value gap confirms, but the retest doesn't confirm and the 9 EMA doesn't confirm. You can still take the trade, just ultimately it's going to be lower probability. We want all of these things to align. Once you learn this strategy and start looking for it, you'll notice it doesn't happen every day. That's one of the reasons why I love this strategy, is because I'm not trading every single second. I'm not finding a setup every single second. I'm finding the good setups that are worth trading. Now we know the 4 steps of the setup. Let's check it out. Here's an example from SPY earlier this week. This red marker here was the pre-market high. As you can see, price action pushed up, closed above this pre-market high, came right back down, retested this 9 EMA, retested this fair value gap, and continued higher. In this example, we see everything confirmed. Price action pushes up, takes out pre-market high, closes above on the 5-minute time frame, retests on the 5-minute time frame, also creates this fair value gap, and retests the 9 EMA to get an entry down here. And then we see a continuation to the upside. That is the prime example of the strategy. Now, if you're still confused on the strategy, I'm going to break this down extremely easy for you and really give you the good picture of the strategy. Here's the exact same example from the last slide. However, I'm going to be drawing this all out for you so you really get a good understanding. Here's the pre-market high. We mark that out. Boom. We have pre-market high and pre-market low mapped out. What we're looking for is price action to break to the upside or to the downside. Price action makes its way up, closes above, confirming the upside. Looking at the candles here, we can see this nice green candle up, followed by a big green candle, then one more. What we look for is the inefficiency between the candles. You can see here, where I have it highlighted, we have a fair value gap. Not only did we break above pre-market high, which is step 1, step 2 is that we formed a 5-minute fair value gap. Step 3 is this candle right here, this red candle. That red candle pushes down into this fair value gap, which happens to be step 4, where we retest the 9 EMA. So not only do we retest the 9 EMA, but we also retest the pre-market high and a fair value gap, launching us to the upside. So we get our entry in here in this fair value gap with a stop loss with a candle close under this fair value gap. Then we see our trade work out perfectly. In this case scenario, we see over a $1.50 move. So this is example 1. I know someone's going to ask, how did I find this fair value gap? What is it? Well, we see this candle push up in this wick all the way up here. So the candle right here would create this fair value gap because this next neighboring candle doesn't have a wick down. Therefore, from this neighboring wick all the way up to that candle is a fair value gap. Buy orders were getting filled in this candle, and it pushed up so fast that some buy orders couldn't get filled, meaning when price retraces back into the zone, buy orders will get filled and push it to the upside. Here on SPY, again, we have another example from this week. We mark out the pre-market highs. We mark out the pre-market lows. We see a push up, 1, 2, 3 green candles up. No wick on this candle, a little wick on this candle. Therefore, we have a fair value gap right here. So here we have step 1 already done, pre-market high break. Step 2, fair value gap. Step 3, retest of this pre-market high. Step 4, test of the 9 EMA. We get our entry for calls down in this level. And our stop loss is a 5-minute candle close below these levels. So somewhere down here probably. And as you can see, those calls took off and just continued higher all day. It's important to note on this strategy that it's a trend trading strategy. We are looking for trend to form in the markets, whether it's up or down, to really capitalize off of this strategy. Now, if we go back to the last example, if we look higher, what do we see? Well, we see a fair value gap here, a retest of the 9 EMA and the fair value gap, and then a continuation higher. We could X that one out on the strategy and be perfectly fine because we did break above, we confirmed trend, and now we see a fair value gap and a retest in the 9 EMA. The risk to reward is great because our stop out point is just a candle close below the fair value gap or 9 EMA. If you want more risk, you can do a candle close below the 20 EMA, which is a little below. This strategy is crazy, and a lot of people have found success with it in the Discord. This is the first time I'm really releasing it to people. Let's go to my charts and I'll show you how it works to the downside as well. Looking here on Meta, you can see we had a significant level down here at this 300. Not only is it a whole psychological level, however, we tested it twice in the aftermarket yesterday. As I marked down the significant level, this would be the pre-market low, right? We break the pre-market low and we come down to the significant level and break that. We break that significant level, and what do we see? We see a fair value gap here. Boom, fair value gap, pre-market low break, confirming a downtrend. We also seen a significant level break, confirming more of a downtrend. Now we have both of these levels set. Price action forms a 5-minute fair value gap. Price action then pushes back up. Not only does it test the fair value gap, but also test the 20 EMA. We get our entry to go short, and then we see a $8 move to the downside. So again, when all of these steps align, it's dangerous. This strategy works so well. You get ultimately the best entry, and we typically see the biggest moves off of these types of setups. This is a strategy that I've been playing with for around 4 months now, and I can say confidently that it's been something that's worked a lot of the times, especially when all steps align. Now, when one step is missing, is that it can break and just not go in your favor. In any trading strategy, nothing is bulletproof. Things are not going to work, and that's just part of it. But ultimately, I feel like you guys got a good grip on this strategy. This is a fairly simple video. Make sure to set your 9 EMA and your 20 EMA. Make sure to mark out your pre-market highs and pre-market lows, and look for those 5-minute fair value gaps. And I haven't said this previously, but please use the 5-minute. Don't use 1 minute or 2-minute, because what you're going to find is a lot of fair value gaps that aren't going to be as efficient as a 5-minute fair value gap. So thank you all so much for watching. If you enjoyed this video, make sure to comment down below. Let me know how you like this strategy. Let me know if you use it. Thank you guys so much. Have a great trading week. Peace out.